Imagine opening your country's bank account. Not your personal account, the nation's account. You scroll. You expect a balance. Instead, you see a number so large it doesn't feel real. Trillions owed. No payoff date. No plan to ever clear it. And here's the uncomfortable part. This isn't a mistake. It's not irresponsibility. It's not failure. It's the design. Governments owing money forever is not a crisis that got out of hand. It's a system that works exactly as intended. And once you see why, you can't unsee it. Right now, almost every major country on Earth is running debt levels that would bankrupt a household instantly. The United States, Japan, India, Europe, all deep in the red. Yet markets keep lending to them. Interest rates move, but the loans never stop. No one knocks on the door asking for full repayment. So the real question isn't why is there so much government debt? The real question is, why does no one expect it to ever be paid back? This matters now because debt is no longer a background statistic. It shapes taxes, inflation, interest rates, housing, jobs, and how expensive your future will be. And most people still think government debt works like personal debt. It doesn't. Not even close. Let's rewind. A long time ago, governments actually tried to balance their books. Kings borrowed to fight wars, then raised taxes to repay. Debt was temporary, painful but finite. Then something changed. Wars got bigger, economies got more complex, and money itself transformed. The gold standard quietly fades into history. Currencies stop being tied to physical limits. Governments gain the ability to issue money backed not by metal but by trust and enforcement. And that's when debt stopped being a problem and started becoming a tool. Here's the simplest way to understand it. Governments don't borrow because they're broke. They borrow because borrowing is how modern money works. When a government spends, it doesn't go to a vault and pull out cash. It issues bonds. Those bonds are promises. IOUs. Investors buy them. Banks buy them. Pension funds buy them. Central banks buy them. Why? Because government debt is treated as the safest thing in the financial system. Not zero risk, but the closest thing to it. Now here's the part that feels backward. When a government issues debt, it's not just taking money. It's creating assets for the entire financial system. Those bonds become collateral. They back loans. They sit on balance sheets. They stabilize markets. In other words, if governments stopped issuing debt, the financial system would lose its foundation. Debt isn't a leak. It's structural support. And repayment? Repayment would destroy that support. This is where the math gets uncomfortable. Governments don't plan to pay off their total debt. They plan to roll it. Old bonds expire. New bonds replace them. Debt doesn't disappear. It transforms. Year after year, decade after decade. As long as the economy grows and trust holds, the system survives. Notice the word "as long as," because growth is the real requirement. Government debt only works if tomorrow's economy is bigger than today's. That's why recessions cause panic. That's why inflation suddenly becomes urgent. That's why interest rates are political landmines. Because when growth slows, the illusion cracks. And yes, it is an illusion. A stable one, but still an illusion. Let's talk about taxes, because this is where people usually get angry. You're told taxes pay for government spending. That sounds logical. It feels fair. But in reality, taxes don't fund spending the way your salary funds your rent. Governments spend first. Then they tax. Taxes serve three quieter purposes. They control inflation. They redistribute demand. And most importantly, they force demand for the currency. You need the government's money to pay taxes. So you accept it. You work for it. You price things in it. That loop is what gives government debt its power. Not gold. Not savings. Obligation. Now here's the irony. People say we're leaving debt for future generations. But future generations don't inherit the debt the way you inherit a loan. They inherit the system. The bonds are assets for someone else. Often pension funds. Often retirement accounts. Often institutions managing your future. One group's liability is another group's safety net. That doesn't make the system harmless. It makes it fragile in a different way. Because the real danger isn't the size of the debt. It's the cost of servicing it. Interest. As long as interest stays manageable, debt feels invisible. When interest spikes, suddenly everything breaks. Budgets strain. Taxes rise. Services shrink. Not because the debt exists, but because the illusion gets expensive to maintain. This is why governments fear inflation and high rates at the same time. One erodes trust. The other exposes the math. And this is why we'll just pay it off is never serious policy. Pay it off with what? Money that would collapse demand? Taxes that would stall growth? The system doesn't want zero debt. Zero debt would mean zero fuel. So instead, governments aim for something much more delicate. Debt that grows slower than the economy. Interest that stays politically survivable. And enough confidence that no one asks for the whole bill at once. That's the real game. And it's why the debt clock never stops. The uncomfortable truth is this. Government debt isn't a sign of failure. It's evidence that the system is running. But systems that depend on endless trust have one weakness. They don't fail gradually. They fail when belief breaks. So the question isn't whether governments owe money forever. They do. The real question is, what happens the moment people stop believing that forever is safe?